We are focusing on the subject of the minimum tax debate as proposed by the Finance Bill of 2020. In case you're looking out for it, it is in Section 12D. And of course, the proposal is that businesses should be paying 1% of their turnover as minimum tax, something which has sparked a lot of debate in the public domain. And of course, as I mentioned before the break, I'm joined by Edna Gitachu from PwC, where she's the tax policy lead, focusing on that subject. And Edna, my first question is, I'm still trying to make sense of this whole discussion around minimum tax because it is, if you read the finance bill, it is under income tax. But the way we define income is revenue minus your expenses. So in the event that I'm in losses, definitely I'm not in the income bracket, but still I would be subject to this tax. Where exactly does it fall? Is it an income tax? Is it a sales tax?
Thank you. Amboko, first and foremost, thank you very much for having me on this show. And to all our viewers, a very good evening. So Amboko, to your question, this is actually an income tax proposal. So what is going to happen, as you rightfully noted, is that businesses who are currently paying tax that is less than 1% of their gross turnover will be required to pay tax that is equal to 1% of their gross turnover. So what does this mean? It means that if you're already paying taxes in excess of 1% of your gross turnover, then you are not under the ambit of minimum tax. And it's a very innovative way of the government trying to bring in many people to contribute to the exchequer through taxes.
But Edna, in the event that I'm in the loss territory, that's where the biggest concern is, will I still be subject to this?
Yeah, Amboko, so the unfortunate thing is that if you're making losses, then you'll be subject definitely to the minimum tax. And there are quite a number of questions that arise. There could be many reasons why companies are in losses. Like, for instance, during this period of the COVID-19 pandemic, would be expecting that very many businesses will end up in losses. So now adding this extra burden of minimum tax is very punitive, especially during this time, which also takes me to the question of, is the timing of this minimum tax right?
Brilliant point you raised there. And my question next is that it reads to me like it's a very clever, or should I say witty way of the government of taking VAT back to 15%. You remember they reduced it from 16 to 14%. But the moment you slap me with 1% of gross turnover tax, then definitely you are finding an intelligent way of bringing it back. Don't you think so?
Well, Amboko, I think these two are very separate legislations. So VAT is anchored in the Value Added Tax Act, whereas Minimum Tax Act, tax will be anchored in the Income Tax Act. It is possible for you to have minimum tax and at the same time value-added tax. So how it works out is, so long as you have hit the threshold of VAT registration, which is currently at 5 million Kenya shillings, then you'll be required to register and account for VAT. So it is possible to have both minimum tax and VAT, but there'll also be instances where there'll be taxpayers will only be subject to minimum tax and no VAT, where their threshold for VAT is below the 5 million.
And Edna, I'm still trying to think around this because if I read the bill, it indicates that this, the minimum tax, should it be passed, will be paid on a quarterly basis. Now, typically, I have always known that income tax is looked at from an annual basis. So the scenario here is that, for example, I have a very good Q1, but my next 2 quarters are terrible. Where will this leave me in terms of how I account for this minimum tax?
Yeah, Amboko, there's actually a challenge right there when it comes to the way the proposal is drafted, because we should be expecting to be paying minimum tax at the end of the year once you have your full year financial results. As you have rightfully mentioned, there could be a situation where in 1 quarter you're doing very well and you're therefore not under the regime of minimum tax, and in another quarter business is not doing as well, like during this period of the COVID-19 pandemic. So there will be an issue of, do you then move to the minimum tax regime or not? So in terms of best practice, it probably would be best for this to be accounted for at the end of the year, where you'll actually be able to assess, did you meet the threshold of at least 1% of your gross turnover or not?
Clearly, there are some kinks there which need to be fine-tuned. And speaking about best practice, clearly this is something which is borrowed from other jurisdictions. Of course, Tanzania does have this kind of legislation in place. What would you recommend as the best practice? Because there's a lot of debate out here, and perhaps the discussion, in my view, should not be whether we should have minimum tax or not, but the rate which is now being proposed. Should it be, let's say, 0.5% or 0.3%?
Amboko, there are quite a number of issues with the way the current proposal is drafted. So you have rightfully talked about the rate. So the rate, if you are to benchmark with other countries within this region, that's Tanzania, and Uganda and Nigeria, the rate is 0.5%. So the 1% is on the higher side. And besides the rate, there are also other issues. For instance, if I have just started a business this year, I may not necessarily end up in profits. So it will be very punitive to then be subjected to minimum tax, because effectively I'll get a tax on my capital. From best practice, what happens is that there's a grace period that is given to new businesses or businesses that are in a loss position, a grace period of about 3 to 5 years. So this is something that possibly should be considered.
Edna, I'm a little worried about Kenya's tax policy framework because as a business, typically what you would want is predictable tax policy. Now, every year we seem to be tweaking this depending on where we think money can be drawn from. So in the 2 financial years ago, we were talking about presumptive tax, which didn't work too well. Then we went back to turnover tax. Now we have minimum tax we're adding on top of this. Do you share this concern?
Well, I do. And I think what National Treasury is really grappling with is how to expand the tax base. Now that you have talked about turnover tax and presumptive tax, the target was the informal sector. But when we are looking at minimum tax, the target is no longer the informal sector, but it's actually looking at the taxpayers that are already in the tax net and trying to see how can we ensure that all these taxpayers pay at least 1% of their gross turnover as tax, corporate income tax contribution. So, but in terms of the policy, it would be good and would encourage the national government to make available the tax policy that they have for the sake of businesses, because this then is going to create some level of certainty.
Edna, to play the devil's advocate here, the government, in light of COVID-19, gave us a raft of relief measures. Tax cuts came thick and fast. Then, of course, we had the cash transfers being enhanced. Surely Kenyans should have seen this coming, because where else will KRA be drawing money from in terms of financing government expenditure? Just to be fair, where do you think this leaves the government? Because the National Treasury tells us, in light of all the tax cuts, it will be foregoing about 180 billion shillings worth of tax revenue.
Well, Amboko, I think we can still be able to collect, but definitely not the same amounts of tax that we have collected in a normal year. So I see KRA actually being more aggressive in terms of audits that they'll be carrying out. And these audits, which we know are risk-based, so most likely the large taxpayers will be subject to a lot of audits. We also think that KRA is going to leverage on their iTax platform to carry out these audits. And as a result of the audits, we are also expecting a number of tax disputes. So to unlock revenue, all eyes will be on the Tax Appeals Tribunal and the alternative dispute resolution within KRA to be able to see how much revenue can be unlocked for the country. But having said that, we also need to look at the budget holistically. We are looking at the revenue, but we also need to focus on the expenditure and see where can we have significant tax cuts.
And Edna, when you look at the implementation of this minimum tax, should it be passed by the National Assembly, how do you see that unfolding? Because we have had a precedent where presumptive tax is passed, but then the implementation, for the lack of a better word, just turns out shambolic, and of course we don't hit our targets.
So I think, Mboko, first of all, my prayer would be that this is deferred and National Assembly considers this proposal so they do not pass it during this period of the pandemic. If we look at the current wording, it is not very well written, and it would be important to have a policy around minimum tax, and again to benchmark further with other countries that have implemented this for a longer period and see what we can be able to borrow from them.
And getting to the tail end of our conversation, finally, when all is said and done, we all know that there are ambitious revenue targets being set for KRA. How do you see 2020, 2021? Because we still have a number of obligations. If you look at our consolidated fund, for example, we still have to meet some debt obligations. Never mind, we had some reprieve there, as well as pension.
I think this is a really tough task for government at this point in time, because as a result of this COVID-19 pandemic, you can imagine that businesses are struggling to keep afloat. So we expect quite a number of them to be registering losses during this period. So 2020 is definitely going to be a tough year from a revenue collection perspective. So the only efforts that I see the KRA trying to employ is what I had alluded to earlier, trying to see whether there are any tax leakages, either from an evasion perspective or just a normal tax audit perspective, and to try and mobilize these funds. I think the other thing from a government perspective is to continue embracing public-private partnership programs so that we can continue with some of the infrastructure development.
And my final question, Edna, because I'm told we're running out of time. You have talked about best practice. If there's one country you would recommend that we try and emulate as far as implementation of minimum tax is concerned, which one would this be?
I think I would pick Nigeria. Nigeria has had minimum tax for a longer period, and they have quite a number of issues that we've discussed in this show that have been implemented. So it would be good for the government to benchmark with Nigeria.
Many thanks, Edna Gitachu. We truly appreciate your time and your insights regarding this subject.